Good afternoon, everybody, and thank you for joining BMF's PPP loan application spending and forgiveness webinar. I am Mindy Marsden, a senior manager in our transaction advisory services practice, and I will be serving as your moderator today. Today, we're going to share with you the top frequently asked questions of us, as well as provide time for you to ask us any burning questions you might have regarding the PPP loan and your business. A few housekeeping items before we get started. One, if you have any questions, please submit them in the Q&A box. We will address them at the end of the discussion. Two, if we do not get to your question due to time, we will follow up with you offline. Three, this is being recorded and a link will be distributed. Joining us today is Jim Merklin, a partner and practice leader of our Assurance Advisory Services, as well as Dale Ruther, a partner in our tax department. All right, with all of that out of the way, let's get into it. Jim, can you please walk us through the new changes with the PPP loan guidance that have transpired?
Sure, Mindy, it'd be my pleasure, and good afternoon, everyone. There were several changes that happened, not only with the Payroll Protection Plan Flexibility Act, which was passed week before last and signed by the President, but also an interim final regulation was issued by the SBA that made also a few amendments. So I'm going to cover a few of the key ones with you right now. First of all, when the PPP Fte was passed, the House of Representatives had a provision in that that the Senate did not like, but the Senate went ahead and passed it anyway. The provision was that if your payroll dropped to less than 60% of the forgiveness of the total amount of your forgiveness, then you would not be able to get any forgiveness. The Senate didn't like that, but they went ahead and passed it, and they took an alternate route by having a couple of senators speak with members of the SBA. Well, the SBA has issued an interim final reg that has eliminated this cliff. And so therefore, if you are not able to achieve the 60% threshold, you'll still be able to get partial forgiveness. There is no cliff, which is what the House of Representatives had in their version. For PPP loans that are taken out after June 5th or after, you have to repay any unforgiven amount of the principal over a 5-year period of time. If you took out your PPP loan before June 5th and you expect to have any unforgiven amount, don't worry, you'll be able to get 5 years too, but you'll need to go back to your banker. And if you and your banker agree to a 5-year amortization, they'll be able to do that. Third item that changed was that we've all talked about before, the June 30th date in the original CARES Act. June 30th was intended to be a safe harbor so that if you restored your number of full-time equivalents to the same number that you previously had by June 30th, you would be able to avoid some of the very detailed calculations with regards to full-time equivalents and a potential proportionate reduction. Well, the Flexibility Act changed that June 30th date to December 31. And so the measuring stick is going to be a little bit different on a going forward basis. Another change is that forgiveness applications, it's now been clarified, will need to file their applications within 10 months after the end of the forgiveness covered period, or the loan will start to amortize immediately thereafter. The 10 months is not necessarily a drop dead. If you don't get your application filed by then, you'll still be able to file it, but in the meanwhile, your loan will start amortizing based on the original loan amortization schedule. Another change that I'm sure you've heard about is the change to 24 weeks. When the CARES Act was passed and the PPP loans were originally provided for, you had 8 weeks to spend the money and get potential forgiveness on the monies that you spent as long as you spent them for authorized things. The Flexibility Act has now increased that number to 24. However, you'll still have an option of following the 8-week schedule. If you believe you're going to have full forgiveness by the end of the 8 weeks, you would be encouraged to go ahead and file for forgiveness after the 8-week period of time. If you decide to take advantage of the 24 weeks, then you'll just be able to, in all likelihood, unless you are one of the industries that hasn't been able to open yet, you'll probably even just be able to report your payroll and you'll still get most of your forgiveness. The trick to it, though, is the 24 weeks. As there have not been regulations that have yet been issued, we don't know if there's going to be allowance for a company if, for example, if you were to achieve total forgiveness and spend all the money by week 10, would there be any possibility of being able to apply after that point in time? We don't know. The SBA has got a lot of guidance that they need to issue out, but based on what we know right now, it would appear as though you're going to have two choices, 8 weeks or 24 weeks, one or the other. A last provision in this that I wanted to mention right now is that there's a $100,000 annual cap on compensation that's included in the payroll calculations. Over the 8-week period of time, that equates to $15,585. And in fact, the interim final regs from the SBA have specifically quoted that dollar amount. One of the questions that I've been getting is, now that we're going to 24 weeks instead of 8 weeks, has that cap gone up to 46,154, which is 3 times that 8-week number? My answer to that would be, based on what we've seen so far, yes. I think that number will go up. However, I would anticipate that the SBA will address that when they issue some clarifying regulations. Mindy?
Great, thank you. Dale, can you tell us, is it too late to apply for a PPP loan right now?
Thanks, Mindy. Good afternoon. It is not too late to apply right now. Effectively, the Congress ends the program June 30th. What they mean by ends the program on June 30th is that you have to have your SBA loan number or E-Tran number by June 30th. So many of the financial institutions are setting up deadlines that are really coming into, some of them were the end of last week, some of them are this week. So if you haven't applied yet, you're going to want to as soon as you possibly can, because again, you'll have to get that. If you don't have that SBA or E-Tran number, it will not be processed. There's approximately $130 billion still left in the fund. Congress was trying to include that in the PPP Flexibility Act, but it was unable to be passed. So therefore, effectively June 30th, it ends, although there is some talk about a second stimulus plan being addressed in July, which would include maybe a second round of PPP funding and the stimulus checks that some of the taxpayers got before then.
Great, good to know. Jim, can you talk to us a little bit about what expenses actually qualify for the forgiveness?
Absolutely. So there are several categories of expenses that qualify. The first are payroll and payroll-related expenses. This can include gross payroll, bonuses, severance, overtime. All of that is included in your gross payroll number. It is subject, as I mentioned before, to a $100,000 annual limit, or the limit, whether it's for the 8-week period of time or the 24-week period of time, the proportional limit on that. You also can include employer portion payroll taxes paid, state unemployment taxes that are paid. You also get to include the employer portion of healthcare costs. And that's not just the medical, but that would include your dental and vision costs coverages as well. And you can also include the employer contributions to the retirement plans. It's important to note, though, that when you're applying that $100,000 limit, you do not include the healthcare, you do not include the retirement, the state unemployment or the employer portion payroll taxes. Those are above and beyond that $100,000 limitation. On the non-payroll side, there are several expenses that can be included. First of all, the rule specifically provides for mortgage interest paid, either real estate or personal property. It's important to note, no principal payments can be included, and you cannot prepay. So if you have something that's due after the date of your 8 or 24-week period, you cannot include that. It has to be due during that period. Now, something new that came out that I had not seen before in the interim final reg that came out last week, was that added to the list of expenses that can be included were, and I'm going to quote this, interest payments on other debt obligations that were incurred before February 15th of 2020. This is a big change. This is not something that I had seen in any of the prior versions of the regulations that have been issued. And it basically opens the door for inclusion of interest expense above and beyond things that are secured by real estate or personal property. So for some companies, particularly companies that are more highly leveraged, this can be a terrific opportunity for you to capture additional costs. Rents or leases are included, and again, that's also real estate or personal property, so equipment leases would qualify. And then utilities paid are also covered expenses. And that would cover the types of things that you would typically expect to see in utilities like electric, gas, water. It also includes telephone. It also includes internet access. And one of the other items that's included in there that the SBA has not issued any guidance on yet is transportation. And there is some clarification needed on that, because transportation might mean transportation of natural gas through pipelines, but it also might mean the gasoline that you put in your car, the oil that you put in your car. We're unclear on that one. I've not been taking an interpretation that gasoline would be included, but understand that is a possibility, and again, subject to regulation from the SBA. Mindy?
Hey, Jim, on that, we had a question that came through and I figured let's just address it now. For medical, is it only the employer portion or the total premium that's allowable for the forgiveness?
Mindy, that's a great question, and it is just the employer's portion. So if you are withholding a portion for employees to pay, that has to be backed out because that's already included in their gross payroll.
Gotcha. Okay, makes sense. Thank you for that question, by the way. Moving on. Dale, if I'm a business owner, can my owner payroll expenses be included in the forgiveness application?
Yes, there are allowable owner's compensation. It is subject to the same $100,000 compensation limit that Jim talked about earlier in his question or two ago. In addition to that, it is also subject to another limitation based on your 2019 compensation. If that was less than $100,000, you are capped to 850 seconds of that amount. What they're really trying to prevent there is periodically we've had spouses who are owners of the company who may be on the payroll for retirement benefit purposes or being able to get the joint filing tax credit for the state of Ohio, who maybe their compensation is 20 to 30,000. They don't want you to be able to issue a bonus to them whereby they could get up to the $100,000 cap. So there is an additional cap on the payroll. The other thing that's a little bit different is it is different based on the type of entity you are, whether you're a corporation or an S corporation versus self-employed or a partner. The $100,000 cap for the owner is just on compensation as it relates to the corporate owners. Those individuals that are partners or self-employed, they don't get to have the benefits. So on an S Corp or C Corp, you get to add the benefits on top of that. For the partners, because it wasn't determined in their Schedule C or any of their K-1 information, it's a separate line item on their 1040. They are not able to include health benefits nor retirement plan contributions under that plan.
Gotcha. Jim, can you walk us through the impact of the reductions in the full-time employees and how do we measure that? But perhaps before you jump into that, do you mind giving the audience a definition of what an FTE is? Because I know that was kind of changing throughout the regulation as well.
That actually has changed quite a bit through regulation. FTE is a full-time equivalent, and what they're looking for is if you're paying somebody to work for you on a full-time basis, then they're a full-time equivalent. If you're paying somebody to work for you on a part-time basis, then you're going to have to take a look at how many hours are they working. And there are a couple of different ways that the SBA is going to let you look at at part-time employees. And I'm going to get to that in just a couple of minutes. One of the provisions within the Act that is, it's actually a little confusing, is that if you reduce your full-time equivalents between a measuring period, which I'll define in a short while, and your average number of full-time equivalents during your covered period, then you have a potential to have your forgiveness reduced proportionately when you file your application with your bank. There are two methods to calculate the number of FTEs, and you get to choose whichever one works best for you. So what I've been telling clients is, here's what the methods are, and calculate it both ways. See which one works for you, works best for you. Frankly, what you'll find is the more part-time employees you have, the more important it is to take a look at this. If you only have a few part-time employees, it's probably not going to be very significant. So to calculate the number of FTEs, you divide the average number of hours paid for each employee per week by 40. And of course, you're capping it at that quotient at 1. So you don't get credit if you've got somebody who works 60 hours, you don't get 1.5 times credit, you only get 1. You'll then, for anyone who is paid for less than 40 hours a week, the borrower gets to choose between calculating the full-time equivalent in one of two different ways. First, the borrower might calculate the average number of hours a part-time employee was paid per week during the covered period. So, for example, if an employee was paid for 30 hours a week on an average basis during the covered period, the employee should be considered to be an FTE employee of 0.75. Similarly, if an employee was paid for 10 hours per week on average during the covered period, the employee would be considered to be an FTE equivalent of 0.25. Now, an alternative measuring stick that was provided by the rule makers here was that you can elect for your part-time participants to just count everybody as 0.5. So all of those part-timers would get 50% credit, and so it makes it a lot easier to track and to measure. I would also remind you the words I used here, because these are important words. It says the number of hours that you're paying somebody. So if you are paying somebody to work 40 hours a week, but they only work 35 hours a week because you're a generous employer and you let your people work less than 40 hours a week, that's okay. You're paying them 40 hours a week. That's full-time equivalent. You are going to need to measure your average FTEs during your covered period. And so in the 8-week option, that's during the 8 weeks of the covered period. But in the 24 weeks, based on everything we know right now, you're going to have to measure that FTE during that full 24 weeks. So that's an important distinction. And for companies that might have been originally planning on let me get through my 8 weeks, and then I might be considering doing some layoffs and after the end of my 8-week period, this may change your mind a little bit about how you measure whether you take advantage of the 24 or you just stick with the 8. Particularly if you're going to get a proportionate reduction if you do some layoffs after that 8-week period was over. That's very important. The basis for comparison is to one of 3 different measuring periods. Those were specifically defined in the regulations. Those periods are from February 15th of 2019 through June 30th of 2019. The second period is from January 1 of 2020 through February 29th of 2020. And the third one, which is really only provided for employers that have a significant number of seasonal employees, you would be able to use the period of May 1 of 2019 through September 15th of 2019. So if your covered period average was, for example, 95 FTEs, while your measuring period was 100 FTEs, you would receive 95% of your calculated forgiveness. And to put that in real dollars, if you borrowed $1 million on the PPP loan, you could be losing $50,000 as a result of that FTE forgiveness. So these calculations are very important, and you can see that they can add up to real money pretty quickly. Finally, keep in mind that there's not just the FTE measuring stick. There's also another measurement that was put in place under the CARES Act, And that is that if you cut anyone's wages by more than 25% during a covered period, then dollar for dollar, you're going to have a reduction of the forgiveness opportunity that you've got. So let's watch out for that one too. Mindy?
Wow, a lot of moving parts there. So everyone in the audience, if you have any questions or you need any help working through those number crunching dynamics, please reach out to us. We do have some tools in place and we can help you get to the bottom of it.
Hey, Mindy, let me also mention, I forgot to mention, I had mentioned earlier the June 30th safe harbor. That's now changed to December 31. And so if you restore your FTEs to where they had previously been by December 31, you're going to get to avoid that FTE calculation altogether, and you'll get 100% of your forgiveness opportunities. There are a couple of other exemptions that you're going to want to watch out for, and these have been issued by some of the regulations. For example, if you terminate someone for cause, or if someone voluntarily terminates from your company, or if you've done some layoffs and you offer in writing to bring somebody back and they refuse to come back, or if your business is not able to reopen because you're under mandatory shutdown by the government because of what's going on with COVID-19. All of those reasons will give rise to those types of things not counting against you. Now, the regulations haven't said, well, does that mean that you exclude them from your FTE counts in the covered period and exclude them in your measuring period, or do you include them in both? There's going to be some regulations that have to be issued to clarify that, but they will not count against you.
All right. Moving on, Dale, based on what we know now, what kind of information should we be gathering that we will need to submit with the application for the forgiveness?
Yeah, Mindy, there'll be a number of reports that companies are going to be required. The first one really revolves around payroll. It's kind of broken down into two things, payroll and non-payroll costs. On the payroll costs, you're going to need to have payroll registers to support the payroll paid during the covered period or the alternative covered period. The alternative covered period is if you received your payroll or your loan deposit on a specific day, you can elect to have the alternative period start on the first day of your next payroll. So that'll be an option. But either way, you're going to have a payroll register to support the payroll amounts that you have. In addition, we're going to need tax forms, be it state unemployment, 941s, for both the covered periods as well as any of the overlap. Because one of the things that they allowed at the end of the covered period now is an accrual for payroll that is paid in the next period that was included in the covered period. So we'll need those overlap forms also included in that. Documentation to support both health insurance and pension contributions, be it invoices, it could be third-party payroll records, anything like that is going to be very important to put together. And the loan forgiveness application breaks out the payroll into three categories. Those that are under 100,000, those that are over 100,000, and owners. So you're going to have to track those. And I think most of the payroll providers have created PPP reports and things for you to assist in filing with your payroll forgiveness. The one thing I would caution you is be very careful in those reports. I've had a couple clients who have sent in some preliminary forgiveness applications, and we looked at the payroll reports, and there were things that were errors on that. And so the clerical function of the payroll companies themselves sometimes create where they're not getting proper information on there. So you're going to want to make sure that you're getting all the proper information if it's coming from a third-party provider rather than your own internal providers. The other thing Jim talked about is there's going to have to be support for the FTE calculations in terms of both the head count calculation as well as the 25% reduction calculation. And the one thing I want to make sure that you get from Jim's, he talked about the FTE and then the 25%, greater than 25% wage reduction. On the greater than 25% wage reduction, if you had a person who was working 40 hours a week and they got reduced to 20 hours a week and they were an hourly employee and they were paid the same amount of $20 an hour, you don't take the hit twice. Okay, you only take the hit on the head count. You don't have to take the rate. So it's the rate is the thing that's important when you're calculating the 25% reduction in salary or hourly wages. In addition, you're going to need documentation to support those clients that are, or those employees that are on the $100,000 cap. If you use the safe harbor that Jim talked about, be it June 30th or December 31st, you're going to need to have a report in there that allows that one, or that supports that one also, as well as payroll tax filings during the forgiveness period. For non-payroll items, what you're going to need is you're going to need loan statements or amortization schedules to support the interest amount that you're claiming forgiveness for. You're going to need invoices and leases for the amounts that show how much rent was being forgiven, in addition to making sure that the period was before the lease agreement started before February 15th of 2020. In addition, you will need, for utilities, you're going to need invoices and canceled checks. In addition, again, at the end of the covered period, there is an accrual allowed. So if there was a period of time for the utilities or the mortgage interest or something that didn't cut off exactly with your covered period, you're going to be allowed to effectively accrue those numbers and get those in the loan forgiveness application also. So I think the biggest thing is really be careful with those payroll provider reports to make sure that that information is good. The second thing is, if you do payroll internally, you're going to want to make sure your reports are going to be able to be in a format that it will feed very easily into the loan application form. The SBA has a loan application form, forgiveness form on their website that's fill-inable as you go with the instructions. And I would encourage you to do a preliminary one of those and get a review done on that prior, obviously, to submission.
That's a really good point. I do know the payroll service providers are trying their best to accommodate with reporting, but we did find at the very beginning of this, during the application process, there were some errors with those reports. So it is pretty mission critical to review and not just rely. Moving on, Jim, say I'm ready to apply for the forgiveness. When and where do I do that at?
Well, you're going to apply for forgiveness through your bank. I will tell you that the banks are not ready to accept your forgiveness applications, even if you've already finished your period. They're still waiting for guidance from the Small Business Administration. In fact, I got an email from a bank early this morning that said, don't expect to be able to apply anytime before July 1st. So definitely keep in touch with your bank. They'll know, and they should communicate with you when they're ready to start accepting applications. From a process perspective, the way it will work is that you'll apply with your bank. Your bank, after you file your application and all supporting documentation, your bank will have 60 days to process your application, and they are the ones that make the decision with regards to forgiveness. It's not the SBA that makes the decision with regards to forgiveness, at least under the rules that have been issued at this point. It is the bank that will make the decision with regards to forgiveness. They'll make that decision within 60 days. They'll send you, of course, a notification as to that, and then they will submit all of the documentation to the SBA. The SBA has 90 days to process the information, but they're not processing the information for purposes of determining forgiveness. They're processing the information in order for them to release funds back to the bank. So the SBA will take the government funds and they will pay back the bank for the forgiveness, and then ultimately whatever is not forgiven, the bank basically keeps that. It's still guaranteed by the SBA, but then you will pay the bank back for any unforgiven amounts over whether it's your 2-year period or your 5-year period of time. Do not expect that the SBA is going to be doing audits of forgiveness applications during that 90-day period of time that they're going to have it. Last I checked, there were almost 30,000 loans in excess of $2 million. It's going to take them a long time to conduct those audits. You're required, when you file your documentation, to maintain that documentation for 6 years. And so it's entirely possible that they might come after you after that, sometime during that 6-year period of time. So be very careful about that.
Dale, at this point, what can we expect with the status on regulation and Q&As issued by the SBA?
Yeah, so normally what happens is really the communication forms that have come out so far are really in three areas. Number one is Q&A from the Small Business Administration, interim rules that are issued by the U.S. Treasury Department, and then actual application forms and instructions from the SBA. And usually what happens is I get home Friday night at about 6 o'clock and I pour down about 4 Tito's and sodas with lime because I like that. And then usually what happens, my phone starts buzzing. And it's usually Jim Merklin on the other line sending me emails saying that there were new Q&As issued or there was new Treasury regulations issued or anything like that, at which point I really probably don't care at that point in time. I probably don't look to it Saturday, but I usually look at it because we like to be on the spot and get things out as soon as possible. But usually somebody else must already have known it up front because they were already issuing guidance about 30 seconds after things came out. But those are the three formats that normally come out are the Q&A from the SBA, the interim treasury regs, and the application forms and instructions. Those all were just recently issued, and then of course they changed with the PPP Flexibility Act. So they're right now going through and making all those changes to the forgiveness apps as well as the actual loan applications still. I think to date what we found them to be is we found them to be very borrower friendly. I think overall that whether it's Congress, whether it's the banks, whether it's the public in general, everybody wants this to be borrower friendly. The banks do not want these loans on their books at 1% for 2 years or 5 years. The federal government does not want this really to be a loan program. They really meant it to be a grant program. So I expect that the issues are going to continue, or the regulations are going to continue to be borrower friendly from that standpoint. I think what they're really looking for is fraud or inurement of benefit to highly compensated employees. You can see that on the loan forgiveness form when they broke out the owner's comp from the people from $100,000 to people under $100,000. So I think what they're looking for is, again, that inurement of benefit and flat out fraud. We've already heard of some stories where people set up fictitious companies that the federal ID number wasn't recognizable, or they created federal or payroll registers that were fictitious. All those type of things. So what they're really, I think, focused on is fraud. Jim and I have been having discussions with the banks to see how they're going to be looking at these loan forgiveness applications, because they get the initial purview of these. And I think it's going to be pretty much a high level kind of cursory review of some of the items. And if you lay it out in detail with as much good documentation as you have, I think the forgiveness process will go fairly smoothly.
Well said. Thank you, Dale. Jim, how do I know if I'm at risk for the SBA audit or if I'm going to have to repay back the PPP loan?
Good question, Mindy. Under the program as it was designed, the SBA can audit any loan. You've heard me refer to audits of loans in excess of $2 million previously, and the SBA has come out and said that they were going to audit every loan over $2 million. And as I mentioned before, right now there's close to 30,000 of those that are out there. So they got a lot of work ahead of them for the next 6 years. But really, they are allowed to audit any loan that they want to audit. And in fact, I fully anticipate that they are going to be doing some spot audits on loans that are below $2 million. And as Dale mentioned, they're going to be looking. I don't expect that they're going to be nitpicking on every little thing, but they're going to be looking for fraud. They're going to be looking for companies that are trying to take advantage of the federal government and taxpayer money. There's been a lot of attention that's been paid, particularly in some comments made by Treasury Secretary Mnuchin, as well as in the media. There's been a lot of attention paid to the economic need provisions of the PPP loans. So basically, when you filed your application with your bank in the first place, you actually had to certify that you had an economic need due to the significant economic uncertainty that existed at that time. And so again, there's been a lot of press on this issue. And in fact, Because of that press, there are a lot of companies, bigger companies, that have actually paid their PPP loans back. Well, in response to some of that activity, there has been some additional guidance that's come out. First of all, the SBA has granted a safe harbor to loans that were less than $2 million and indicated that they're going to assume that those businesses did not have access to sufficient funding, that they'd be able to make it through this crisis without having access to the PPP money. And so they're not going to challenge the economic need issue for those businesses. That doesn't mean that those businesses are not going to get audited. That doesn't mean that the SBA won't try and challenge some of the forgiveness that they're claiming, but they're not going to challenge them on the issue of economic need. For those loans that are $2 million or higher, it's important that those companies maintain documentation in their files to be able to demonstrate to the SBA, not if they get audited, but when they get audited, as to why did they need the loan. If the SBA challenges that position during audit and the company states their position and the SBA ultimately disagrees, then the company is going to be able to repay the loan and avoid any penalties. Really, the penalty provisions from the additional guidance that have been issued, the penalty provisions are only going to kick in if the SBA says, no, you really didn't need the money. The company says, yes, we did need the money. And it ends up going further up the chain in terms of appeals. And so if you're otherwise worried about those penalty provisions, and that's why you have not yet applied for a PPP loan, I would encourage you to go ahead, as long as you have reasonable provisions as to why you need that money, I would go ahead and apply for the loan.
All right, last question before we get to the Q&A. And this is for Dale. As it relates to the tax side of things, will I need to include the loan income or loan expenses in my taxable income?
Okay, yeah. So what happened is when the CARES Act passed, it came out and it said that the loan forgiveness was not going to be considered taxable income under the forgiveness of debt provision. Normally, if you have debt forgiven, it normally is considered taxable income, depending upon a variety of situations around that. But in the statute, they came out and they said there would not be taxable income. However, as that moved forward to the IRS, that was true. They said that is correct. The loan forgiveness will not be taxable income. However, there is a section called Section 265 in the code that says that when you have non-taxable income, if there are expenses that are associated with that, those expenses have to be allocated between the taxable and non-taxable portion of that of the income. Sometimes that happens in investment accounts where somebody has dividends and taxable interest and muni interest that's non-taxable, and they had investment expenses that were deductible. They had to allocate and not get to deduct all the expenses against the taxable income. Well, in this situation, since all of the forgiveness income is going to be exempt from taxation, therefore they came back out and in Notice 2020-32, they issued a finding that basically said the expenses will not be allowable to be a tax deduction. So what does that really mean? What that really means is effectively you have to figure out what your marginal rate is for your taxable year, and you're going to have to pay taxes at that level on those expenses that were forgiven at this point in time. When that first came out, there was a very strong reaction from Congress and the public about, hey, you said this was going to be not taxable. But once Treasury Secretary Mnuchin and the IRS said, hey, look, this has been standard operating procedure since we've been, this is not anything new, it seems to have died down a lot. In fact, they thought that in the PPP Flexibility Act that Congress might address that, but they were silent on it. And it does appear that it has lost momentum. So I would expect that you should take a look at considering the taxable income impact on your estimates. You're going to have two estimates that are going to be coming due July 15th. I know a number of clients I've talked to, we're trying to take a look at that and determine what is that impact on the tax estimate that has to be paid on flow-through entities or C corporations. And then you're going to have to make a decision in terms of, do you want to try to use one of the estimated safe harbor provisions based on prior year tax or anything like that? or whether you believe you pay the current your tax, or whether you're gonna have taxable income at all. So it has made the estimated tax payments a little more complicated going forward, because it will more than likely at this point in time be considered taxable.
Hey, Dale, if I can add one other point to that. My contacts at the American Institute of CPAs have been actively lobbying Congress on this, and the feedback that I've gotten from them fairly recently was that they did not include any provisions with regards to this issue in the Flexibility Act, principally because they didn't perceive it to be a time-sensitive need. They're looking at calendar year ends and thinking that, oh, we got time to address this, and they know there's going to be other stimulus bills that they're going to be approaching. What they're saying is that there is bipartisan support on both the House and the Senate sides to address this issue, because it clearly was their intent that those dollars be non-taxable. Now, again, we can't promise anything's going to happen, but I wouldn't lose hope on the issue just yet. I think there might still be some legs, and we'll certainly report out to you if we hear anything further on this.
Yeah, I think that's a good point, Jim. I guess the big problem with that is we do have July 15th estimates coming up, and you're going to have to make a decision on that. And as it sits currently now, it is taxable. So again, to Jim's point, I don't know exactly where it will land, but you probably want to take a hard look at which one of the safe harbors applies best to you.
Agreed.
All right, well, now we're into the Q&A section of this webinar, and we have a pretty hungry audience, which is great. We have about 28 questions. I'm going to start from the top and kind of work my way down. Like I said at the beginning, if we don't get to your question, much apologies. We will reach out to you offline and address any questions you have. Further, if we answer your question, but you might have a follow-up question, reach out to us and we can, conversate and get everything figured out. So starting at the top, do you have to maintain the average salary requirements for all employees during the entire 24 weeks if you choose that option?
Well, I think based on what we know right now, I think the answer would be yes. I think a couple of things to keep in mind. First of all, as I mentioned before, there are a number of companies that I've talked to that were planning on going through the 8 weeks and then laying people off afterwards because their businesses have not recovered. And for those businesses, you're going to want to take a look at, well, what if I get a proportionate reduction on my forgiveness, and how does that compare to the dollars I'm going to save my business if I have to lay people off? Those are not going to be easy decisions for anyone to make. Not that laying someone off is an easy decision, but everything we've seen so far with regards to 24 weeks indicates that the FTE measuring stick would be in place for the entire 24 weeks.
Yeah, let me just add one thing onto that, Jim. I think you're absolutely right. I think the one thing you got to take a look at is measuring the two things. The extension from 8 to 24 is going to give you the ability to utilize all the dollars, and more than likely, they only funded 2.5 months of expenses. If you had 24 weeks, you more than likely are going to get that. The downside to that whole thing really, I think, does go around the payroll that Jim talked about, both the salary cuts and the FTEs, because if you're required to keep the people until December 31st, we don't know what's going to happen. Like Jim said, will there be another relapse of the COVID? How's the economy bouncing back? All those things. So I think you got to look really hard at, the measurement tool is, what would it look like if I got to keep this in place, and what's the probability that I will be able to keep my same level of activity with same number of FTEs and payroll through December 31st versus cutting it off at June 30th. And at June 30th, how much of the loan have I got forgiven? Is it 80? Is it 90? Is it 100%? And if I'm at those high levels, I may say, you know what, I just want to be done with this. I don't want to take the risk going forward. But that's going to be a decision that I think the company can take a hard look at, and I guess bounce off of us if you have any questions going forward, because that will be a key issue in deciding whether you want the 8 or 24 weeks. And I think Jim said it, but just to be clear, loans before June 5th get the option. Loans after June 5th have to use the 24 weeks. So I think that's the way it is in the regs.
Correct.
All right. On the healthcare piece, what if you are self-insured? What are the limitations there?
There really aren't any limitations, Mindy. Really the only thing I would call a limitation is that if you're self-insured and you're paying your medical costs and your dental costs, then you get to include those as forgivable expenses. However, if your employees are contributing by having an amount taken out of their payroll, perhaps going through a Aviva or something like that, then that reduces the healthcare costs. It's really the employer's cost of those expenses would be forgivable.
Okay. What about interest on working capital facilities? Is that included in the forgiveness piece?
That actually is one of the items that came out of the interim final reg. We had not expected that would be included until this interim final reg came out late last week. And I gave you the words in quotes directly from that regulation. So yeah, it looks like now all interest expense will be includable and would be includable in your forgiveness calculation and reimbursable. You're on mute, Mindy.
Thanks, it told me that. Do you have to make an election to keep the 8-week spending period? If so, how do you do this and when do you have to make the election?
Dale, I don't know if you've seen anything on that yet. I haven't seen an election. What I've seen and I expect is that it'll be based on when you file the application.
Yeah, I agree with Jim. I haven't seen anything that says that you have to make a specific election. The one thing that I would tell everybody is, you know, I guess I would just be patient. Sometimes that's hard in today's because everything's instantaneous, getting stuff done because of social media and the internet and everything like that. I say be patient because I agree with Jim. Nothing said that you have to do this. There's any deadline that you're up against. I think the idea is going to be do the forgiveness application at the end of the 8-week period, see where you sit at, and then make a conscious decision based on the amount of forgiveness that you have versus the risk going forward. So there's not really a day certain yet. I think you have some time and you should just be, I'd be patient on it. I know that's not easy these days, but that's what I would suggest.
Well, and there's that big uncertainty that none of us know right now, which is what are these additional Q&As and interim final regs going to reveal? There may be provisions that are coming out that could change your decision. And so I agree with Dale, while the banks aren't going to be ready to accept applications for a couple of weeks anyway, as I mentioned before, you've got 10 months after your forgiveness period, your covered period, to file for the forgiveness. So take your time on this. There's not a huge rush to be the first one into the gate here.
What about additional benefits offered to employees? Life insurance, disability, gym memberships, etc. Are you also able to include those in the forgiveness?
My interpretation currently on that is no. Dental and vision, I would say yes. Disability is kind of up in the air. As Jim just said, I think we're waiting for some more clarity from the SBA on exactly what that includes. But my interpretation on the list you just read there, more than likely not. I would be more in the medical, dental, vision amount. Disability would kind of be on the cusp. Those other ones, I would say no.
Does the $100,000 limit mean the first $100,000 of given salary is permissible in the forgiveness calculation, or does that negate the salary completely in the calculation?
Well, it doesn't negate the calculation completely. In the 8-week calculation, it was anticipated that you would be able to take $15,545 of compensation for each person. And that is just a mathematical number, 100,000 divided by 52 weeks times 8 weeks. Our anticipation is that that will continue for the 24 weeks and you'd get 100,000 divided by 52 weeks times 24 weeks, which is approximately $46,000. That's what we're expecting to see. Now, that could be subject to regulation. The SBA might decide to take a contrary position, particularly when they think about, well, so we loaned you based on 2.5 months of that same compensation. So if they looked at it at an individual level, they loaned you 2.5 months of compensation, but they would actually be forgiving more than that for that individual. And so they could decide that they don't like that math and back away from it. But right now, from what we know, that's how it would work.
What about profit sharing contributions for a partner? Can that be included as part of the loan forgiveness?
I would say no, it cannot, because the partnership contribution for a partner is deducted on a different line. It wasn't included in the form that they're looking at on the tax return, because it would be coming off the front as a SEP or whatever type of contribution. So you could not do it for the partners. Now, if there was partnership that had employees and it included employees, the employee portion of it would be allowable, just not the partner.
How would an auto allowance for an employee apply? Is it paid as a taxable income?
I think if it's part of their gross wages, then it's includable.
Yeah, I would agree. I think it's includable. If you include it as gross wages, if it's not included as gross wages under a reimbursable plan, then I think it's going to go back to the question that Jim had, is what's the definition of transportation in the regs? So if you put it on the person's W-2, I think Jim's interpretation would be correct. If it's a accountable plan, then I think it'll depend on that definition of transportation.
If you terminate an employee for performance issues or an employee resigns voluntarily, do these employee changes need to be included in your FTE calculation?
Well, as I mentioned earlier, one way or the other, those will not count against you. The SBA hasn't issued regs yet that give us clarification as to whether you include them in both or exclude them in both. But you're not going to have a situation where you include it in your measuring period and then you exclude them because they're no longer there. So it will not count against you.
What if wages were cut prior to the PP period?
The measurement period is the first quarter of 2020 compared to the covered period. So I guess it would depend on when it was cut. If it was cut back in the 19 amount, then I would say it wouldn't. But if it was cut during the first quarter of 2020, because that's the measurement period for the 25% reduction.
Please recap the dates for the basis of the FTE measurement. Does the number on the original application get taken into account?
All right, so recapping those dates, the three measuring options that are available to you are February 15th of 2019 through June 30th of 2019. The second option available is January 1 of 2020 through February 29th of 2020. And the third option that again is generally reserved for companies that have a large number of seasonal employees would be May 1 of 2019 through September 15th of 2019. Those are the three options that are available to you. The measuring stick that was asked for on the loan application is slightly different. So that's not the number that you'll use in the final determination.
This next one is good. Please talk about the paid wages versus incurred wages during the covered period and how to manage that.
Okay, I'll start, Jim, and you can kind of fill in behind. So basically what happened was if you have a pay period that got paid during the covered period, okay, then that payroll is allowable in the calculation for forgiveness. So if you got paid on, let's say you had your loan deposits on a Thursday, the next day, Friday, you had a payroll that came out of your bank, okay, and it was for the period that was way before or before the covered period, because it was paid during the covered period, it is still eligible for forgiveness. You go to the back end of it, if you have, you're cut off of your 8-week period, okay, and you still had 5 or 6 days left, okay, and they either have to be weekly or biweekly pays, okay, and it's paid in the next payroll, okay, then you get to accrue that amount, and that's includable as payroll also. I think one of the things that I find interesting, I just went through this with a client the other day, was he was like, I don't want to include, based on the dates that we had, he didn't want to include the May 1st. He was in the hospitality restaurant industry. He said, I didn't want to include the May 1st payroll in the forgiveness app because I didn't call my people back because I only called them once I got the money. So he's like, I don't want to put that in because that's going to throw my FTE kilter way off, and I'm not going to make the test of the 100% forgiveness. So I don't think he has to include that. It says paid or incurred. I think you have the option at that point in time. That was one of the reasons he didn't want to do it. He only wanted to pick up the payrolls that came after he got the money. And then, like I said, you get the accrual at the end. So it's effectively almost like you're on a cash basis when the cover periods start and accrual basis at the end.
That is an interesting dynamic, Dale. And based on everything that I've seen so far, that would seem to imply that companies are going to be able to get more than 8 weeks. If you did a strict 8-week, here's what an employee makes, you may be able to get more than that. So that is something to watch out for. By the way, that issue of accrual is not just an issue for payroll. It's an issue for the non-payroll expenses too. You do get to accrue those that occur beyond through the end of your covered period, as long as they're paid with the very next invoice.
For equipment leases, is it the amount invoiced and paid or only the interest element that is allowable?
It's the full amount. It's a lease. You don't own the equipment, so you get to claim the entire amount of the rent. And the fact is, with equipment leases, you don't usually know what an equipment interest component might be.
Mm-hmm. We received one.
Sorry, Mindy, real quick on that. I don't know if anyone has capital leases on their books. I think my opinion of it, and Jim, you can correct me, I'm kind of winging it here a bit, but I would think the payments would still qualify. There are some different rules for capital leases for tax purposes than financial reporting purposes. So I'm not sure I'd make the same split. I would just include it all as a lease payment.
I agree with that, Dale.
This next one is good. We received our funds June 5th. Is it correct that June 5th and later requires you to use the 24-week period as the standard rule, no option for 8 weeks at all?
That's actually
I think it's correct. But
yeah, go ahead, Dale.
no, I was going to say I think that's correct. I think it's June 5th or I'd want to make sure the 5th date. Is it the 5th or after the 5th? But I'd want to double check that. But I know the 24-week is for loans. Again, I'd want to see if it's June 5th and after or after June 5th. So Mindy, whoever that is, we'll send them a answer for sure.
Yeah, that is an interesting question. And another component to that is it is June 5th or after, but there is a difference between the date the loan was dispersed and the date you entered into the loan. You may have entered into that loan, if you got it on June 5th, you may have actually entered into it on June 2nd, and it took the bank a couple of days to get you the money. So both of those pieces need to be looked at.
That same person issued a question that said, why don't we have Tito's and limes for the Zoom meeting? So we can address that when we reach out to you.
We do.
Yeah. Okay, do you expect PPP loans to affiliates will more likely be audited sooner than later, especially if the total of the loans to the affiliates are more than 2 million, but the individual entity loans are less than 2 million?
I do believe that when the SBA looks at the loans in excess of 2 million for audit purposes, that they are going to be grouping the affiliated entities together. And so if you have 3 entities, one borrowed $1 million, another borrowed $1 million, and another borrowed $1.5 million, I expect all 3 of those would get looked at.
Okay. If we don't file for forgiveness prior to year end, how do we record this in our financial statements, loan and total costs?
That's an awesome question, Mindy. And without getting too deep into it, because there has been some guidance that has been issued by the Financial Accounting Standards Board and the AICPA. And it's different for not-for-profit organizations versus for-profit organizations. In the not-for-profit world, they're generally going to be looking at these as basically a committed contribution. And so, or a contingent contribution. So they've received a grant from the federal government that has conditions. And so long as they have achieved those conditions before the end of their year, then they likely would be able to record it as contribution income. In the for-profit world, the guiding measure that I've seen thus far has been that have you gotten a legal forgiveness or have you not gotten a legal forgiveness? They seem to be more bent on watching the legal nature of whether you've achieved that forgiveness. My expectation is that there will be some additional clarification that comes out, because when the FASB wrote their technical Q&A response, which they did a few weeks ago, was before the new law was passed. So the expectation was that companies were going to be applying for the debt forgiveness in the June, July, August timeframe, and they would have their decisions long before their year ends. Now that a number of companies are going to be taking a 24-month look at this, they might not necessarily have a legal forgiveness on the loan before they come to the end of their year. And so I anticipate that the answer will be that if they have met all of the guidance and as long as they have gone through the application process, then if they receive that forgiveness subsequent to year end, but they had met all of those conditions before year end, that they would likely be able to record the forgiveness before year end. But again, I think that's an area that will receive additional clarification.
All right, thank you, Jim, and thanks for letting us squeeze one more in. I know it's 2 minutes after. Like I said, you were a hungry crew. We got 19 questions answered, but we have 19 still open. So we will reach out to you guys individually and try to get your questions answered. Otherwise, thank you so much for joining us, and keep an eye on your email for further webinars that we plan to host. Take care, guys.